Well, hello, smart investors. Ron Benning here with your Sacramento Fourplex year-end market update for 2025. In this video, I'm going to walk you through the key market trends that happened during the past year, what's really happening with pricing, inventory, and buyer leverage, and then I'll break down an updated break-even GRM so you can see exactly where deals are working in today's market. These trends will help you understand where the market has been recently, where the market is today, and where it's likely headed over the next couple of months. Make sure you watch to the end to discover where to look for the best opportunities. December of 2025 continued to be a buyer's market for Sacramento Fourplexes. The months of inventory based on closed sales came in at 7 months. Now that's up nearly 192% compared to last year, but down sharply from a few months ago when it was 17 months of supply. What this tells us is simple. Buyers still have leverage, but not as much as they did a few months ago. The number of active fourplex listings was up 16.7% compared to last year, but down 22.2% from last month. Active inventory on January 4th was down to 26 active listings compared to 34 just a few weeks ago. Buyers still have more choices than they did a year ago, even considering the seasonal pullback. Closed sales in December totaled 4 properties, which is down about 60% from December of last year, but still up 33% from the previous months. So while overall sales volume remains low, we are starting to see buyers step back in when pricing makes sense. Pending sales in December came in at only 3 properties, and that was unchanged from the broader slowdown that we had experienced the month before. Pending activity was down month over month, but up 50% from last year, which tells us demand is soft, but not gone. Let's talk a little bit about buyer behavior and negotiation power. The sold to original list price ratio came in at 92% in December. That means buyers are still negotiating meaningful discounts, although we did see some tightening month over month. The takeaway here is important. Well-priced properties are selling while overpriced listings are simply sitting. This is still a negotiation-friendly market, but not every deal is a steal. The days on the market is a big signal here. The average days on the market jumped to 118 days, which is up 18% from last month and up more than 90% year over year. That tells us two things. Buyers are very selective right now, and only properties priced correctly are actually going to close escrow. Anything overpriced is just going to be sitting, and often sitting for a long time. Volatility, not recovery. Let's talk about that pricing. The average for sale price in December was $1,027,000, which is down 11.1% from last year and slightly lower than last month. The 6-month trend here remains depreciating. The average sold price, however, came in at $1,051,000, up 26.5% from last month and 4.3% year over year. Now, this next point is critical. This increases are mix driven, not market wide appreciation. What I mean is we're seeing better quality assets trading, not a broad price recovery. The long-term pricing trend remains neutral to slightly downward, and investors are clearly demanding real income performance, not speculation outside of Midtown and East Sacramento. Now, for some time, I've been pointing out that Midtown and East Sacramento have a different pricing point on the income approach than anywhere else in the county. The degree of this market separation appears to be accelerating and widening. In 2025, there were a total of 38 fourplex sales in the Sacramento area. But shockingly, 17 of the 38 total sales were in downtown, Midtown, or East Sacramento. As of January 4th, There are 6 pending fourplex sales in the greater Sacramento area. And here's another shocker. 5 of the 6 pending sales are currently in downtown, Midtown, or East Sacramento. And the one other pending sale is one of my buyers. What this means to me is that we have 2 fourplex markets in Sacramento, one for the downtown, Midtown, and East Sac, and one for all other areas in Sacramento. And as we're considering pricing, we need to keep this in mind. We must also be realistic about how these more expensive sales prices in the one area affect and skew the averages for the entire market because of the small sample size. Next, let's talk about interest rates. As has been the case all year, interest rates remain one of the single most important drivers of the market going forward. Right now, investor loan rates for fourplexes are going for about 6.5%, which is always a little higher than the base rate on the Freddie Mac chart we show you. But looking where rates were at the beginning of the year, we can see that rates came down just over 0.75% in the past year. Despite this, we still see that prices have been coming down slightly. I'll talk about that in just a minute. Over the next few months, rates will likely remain fairly stable, but a great deal of what will happen with interest rates is depending on what happens with inflation over the next few months. Before we move on, it's important to step back and put interest rates into a broader economic context, especially as we close out 2025 and head into a new year. Inflation has been one of the biggest forces shaping interest rate policy this year. In 2025, the U.S. inflation rate fluctuated between 2.3 and 3%, and the most recent official reading came in at 2.7% year over year. That's meaningfully lower than where we were a couple of years ago, but still above the Federal Reserve's long-term target of 2%. Looking ahead to 2026, most forecasts are calling for inflation to moderate gradually but not disappear. Current projections generally put inflation somewhere in the 2.4 to 3.1% range during 2026. In other words, inflation may ease a bit, but it is not expected to fall fast enough to justify dramatically lower interest rates. That brings us to the mortgage rate expectations. Several major institutions have published their outlooks for 2026. Fannie Mae is projecting the 30-year fixed rate to gradually decline and end 2026 around 5.9%. The Mortgage Bankers Association expects rates to hover closer to 6.4% for much of the year, while the National Association of Realtors sees rates stabilizing near 6%. What all of these forecasts have in common is that none of them are calling for a rapid return to ultra low rates. That's an important takeaway for investors. If rates drift down slowly, it could support demand and help inventories tighten modestly. But unless rates fall more meaningfully, affordability and cash flow constraints will continue to cap pricing and may make the market sensitive to even small rate changes. Using current pricing with 25% down payment and a 6.5% interest rate, the target break-even GRM for a Sacramento Fourplex in December is 11.83. Here's the good news for buyers. A meaningful portion of recent sales came in at or below this break-even level, meaning cash flow neutral or cash flow positive deals are still possible. The real opportunities remain in aged inventory and making offers to motivated sellers. Here's my short-term outlook. It really surprises me how quickly the excess inventory has been mopped up through a combination of sales, pending sales, and sellers pulling their overpriced properties off the market. I expect pending sales to tick up modestly on the aged inventory portion of the inventory as bargain focused investors start making offers to some of the sellers with aged inventories who I believe will probably blink because they want to get their properties sold. Closed sales may increase slightly as some of this inventory clears, but we are still in a buyer's market for now. But this could change if the new listings don't start to go up. Normally, the first few months of the year brings a higher level of inventory, but we'll have to wait and see if this happens this year. If rates move higher, activity may slow a bit, and the pricing pressure to come down would increase. If rates ease slightly, demand may improve, but not likely enough to flip this into a seller's market over the next few months. The bottom line, buyers will continue to hold the advantage in the short run. One key takeaway from 2025 is that stronger immediate cash flow will become more important because the rental market has softened and overall rents decreased in 2025 for the first time in several years. Owners have assumed that they could keep increasing rents indefinitely, but this year has shown us that at least in the short term, the upper limit for rent increases may have been reached. For buyers, this is still one of the best windows that we've seen in years. Cash flow deals are possible, especially on older listings with below market rents. Discounts of 8 to 10% below asking are still happening, but not on well-priced assets. If the GRM is already near or below 12, expect some competition. The best opportunities remain with patience and multiple offers. Look in the links below for how to subscribe to my GRM reports and my MLS feed. For sellers, it's not all bad news, but strategy matters. Most sellers today are still selling for 2 to 3 times what they paid for their fourplexes just 10 years ago. If you're selling, price based on income, not just comps. Keep the GRM at or below that key break-even target area and expect to negotiate with buyers. Effective marketing matters more than ever, and what I'm doing goes well beyond the standard approach most agents are taking. If you're curious about that, feel free to reach out and I'll walk you through what I do to get my properties sold. To get an updated value on your fourplex's value or current rent analysis, check the links below or scan the QR codes on the screens. Let me know in the comments what topics you'd like to see covered next. And whether you're buying or selling in the next 7 days or 7 months, give me a call or text. I'd love to help you plan a smooth and profitable investment.